Yo, what's up everyone? My name is Andrew Warren, and in today's video, we have another portfolio update for you all. So this is just going to be another transparency update where I talk about the losses for today. Unfortunately, there were no gains for today, but that's pretty much consistent throughout the market. I mean, even on my watch list, there's only like 5 to 7 stocks that are actually green. So if that tells you anything about the market, then it just shows how bad today was just in terms of losses for pretty much everybody that invests in long-term stocks. So anyways, with that, if you do enjoy these types of videos where I talk about my portfolio, just have some transparency with that and my positions and stuff, and of course talk about my thoughts and predictions for the future as well, then please make sure to smash that like button. It really does help me out and I definitely appreciate it. But just back onto the main topic today, as you can see, we had a huge dip today, pretty much a small crash, not technically a crash, but it was definitely a big drop for today, especially for my portfolio. But even when I compare my losses for today with some of the ETFs that mirror the general stock market trend, it's pretty much similar with what's happening in the market with ETFs like VOO. VOO is commonly seen as one of the stocks that just represents the general stock market trend since it tracks some of the top companies in the S&P 500. So as you can see with this stock today, it's down 2.34%, and that's pretty similar to what my portfolio is looking like. My portfolio is down 2.44% today. We've lost over $2,000. We're at minus $2,145 for the day, and then after hours, it's just barely in the positive. We're at plus 0.08% or plus $71. So that's another thing that I always like to emphasize, which is that after hours is not representative of what the next day is going to look like a lot of the times, because yesterday I think after hours was actually pretty positive, and then of course today was really negative. So I just want to emphasize that as well. But as you can see in the pre-market, it actually wasn't doing too bad from 9 to 9:30. I mean, at 9:30, we were at plus 0.19%. So in the pre-market hours, it actually performed much better. A lot of our stocks performed much better. And then once the normal market hours started at 9:30, that's when things really went downhill, and it spiked all the way down to minus 2.38% at 10:40 a.m. And then we got a little volatility in the meantime. At about 11:50, it was up at minus 0.99%. Then, of course, a little bit volatility here and there. But it pretty much went back down to where it was at like this minus 2.24% marker at 10:55. So the general baseline at the end here is about minus 2.44%. And then, like I said, there's a plus 0.08% in after hours. So today was definitely a bad day. Like I said, it doesn't qualify as your typical crash statistic, but it's definitely a huge dip day. So this is one of those where a lot of people took some heat in their portfolio, and I'm definitely feeling it as well, especially with Apple being down 3% and Tesla being down 2.74%. So even with a lot of these though, and I like to emphasize this in many of my videos, when you have days like this, it's important to think positively. So think about the red days as opportunities. These are days where you have a chance to buy a stock at a cheaper price than it was at yesterday. So that's honestly the way that I look at the stock market. I try to keep a positive attitude in every sense. So when it comes to investing, if it's a red day, then that means there's an opportunity to buy stocks on sale. And if there's a green day, then that means my wealth is growing, my portfolio is growing, and I'm gaining value in my investments. So that's a good thing as well. So if you really take on this perspective, it can be a lot more fun to invest because there's a lot less to stress about when you view things in a positive light. And it's not like it's being unrealistic to view it that way, because that's really what it is. The general stock market trend is for the stock market to go up in the long term. So when you have dips like this, it just gives people chances to buy stocks at a cheaper price than they will be at in the future. However, keep in mind, as always, anything that I say or have said in this video is not to be considered financial advice. I just have to emphasize that. But that's definitely the perspective I have on the market, and I really think that it's one of the best perspectives you can have. I feel like a lot of people are spreading fear right now. Some of it is definitely reasonable fear, especially with the unemployment rates, of course, the Fed spending and stuff like that. All of those are reasonable concerns. But when you really look at the long-term vision, this is just a blip on the map. It's just a temporary road bump that we will most likely get over. And keep in mind, today isn't even really a bad day. Today is just like your casual stock market day. Yes, I know this is a much bigger drop than what we're really used to. I know over the past like crash trend that we had circuit breakers being hit and everything. So like minus 5%, minus 10%, stuff like that. But especially with a day like today, I know it's a little bit more of a drop than your typical like 1% drop or so. but you kind of have to just treat it the same way as your typical day-to-day movements of up and down, because that's pretty much what it is in my opinion. And even if there is another stock market crash within this year, then that just means I'm going to be taking advantage of these fire sales. Like, obviously I worry about a crash, but if it's actually going to happen, then I might as well take advantage of it and buy the dip hard. So just to give you all full disclosure ahead of time, if there is another stock market crash, I'm going to be buying the dip heavily, just like I bought the dip way back in like March. So as you can see, all the way through early February, well, towards the end of February, and then all the way through March as well, I bought the dip all the way down, and then even bought at the bottom as well for stocks like Microsoft. I definitely wish I would have picked up some Tesla, but I did pick up a lot of Microsoft, and as you can see so far, it has made me a decent amount of money. So we're at around plus $5,000 so far just in gains for that one stock. So with that being said, I can't really predict whether we're going to have like another stock market crash in the future, and keep in mind that even if there is like a Rona round 2 lockdown, that doesn't necessarily mean a crash is guaranteed to happen. We've already seen the stock market performing in very weird ways in correlation to our actual economy. For example, the stock market is up pretty significantly right now, even though our economy and the total outlook on society right now looks terrible in America, but the stock market is still doing very, very well. So keep that in mind. Just because there's another second wave of the Rona, it doesn't guarantee that there's going to be another crash. And at this point, the Fed has mentioned that they will pretty much do anything they can to keep these markets up, because keep in mind, the stock market is probably one of the only few good things going on in America right now. This is one of the only things that people have a lot of hope for, including myself. This is one of the things I look forward to every day. So if the stock market crashes, then a lot of people just lose all hope, and I think many problems come along with just the stock market crashing. So the Fed definitely wants to keep the stock market up if they can, and I believe they will try to do so if necessary. So I just think that's important to keep in mind as well, since a lot of you are probably a little bit fearful right now. And also to mention this as well, in my opinion, the best way to invest is not to try to time the market. So that means not trying to think, okay, is another stock market crash coming up soon? Should I go ahead and sell? I mean, that's obviously up to you, but if you really want to invest for the long term and get the most out of your compound interest, then I personally think a good strategy is just buying and then holding for the long term, holding for retirement. I'm talking about being patient for 40 years, and your money will grow for you exponentially, so much more than you ever thought it would. But anyways, I just wanted to mention a few of these things. I know I've said it in previous videos before, but as always, we do have new viewers coming to the channel, so that's important in my opinion. So next up, let's go ahead and discuss the losses for today. So we do have some actual individual news pieces for both Microsoft and Tesla today. So we'll start off with Microsoft. As you can see, I'm down 1.79% for today, and that's about minus $700. So definitely a big hit for Microsoft for sure. It takes up around 45% of my portfolio, so I can't really expect anything less. But one of the huge reasons this stock is down so much today is because Microsoft recently closed all of their locations, I believe, because of the second wave of the Rona coming up. So we saw a similar thing with this with Apple as well in the past, where they closed stores and then they reopen. So whenever a big company closes their stores, it's obviously going to have a big negative impact on the company itself and the stock. So that's just something to keep in mind when you have negative news like this that's released where they talk about a company closing stores. It's obviously probably going to cause a drop in the stock. So that's definitely reasonable to expect. But honestly, the majority of Microsoft's revenue comes from like software and just online retail and stuff like that, and e-commerce. So obviously this will be a big revenue hit. And another thing to keep in mind as well is that Microsoft has said the workers that work at retail will still have their job. So that means they could still be paying the workers even though the stores are closed down. So it's definitely a big revenue hit for Microsoft. And I also believe that they mentioned that it will be factored into the upcoming quarter earnings. So that's just something to keep in mind. It may affect earnings in some slight way, and that's one of the huge reasons why the stock took a hit today, because they announced the closure of the stores once again. So I just thought that was important to mention because it is a piece of news that does affect this stock. But so far, I'm still happy with how this stock has performed, and I'm still up 14.80%, so I'm pretty satisfied. So next up, we have Tesla stock, and this one took a huge hit today, minus 2.79%. It's something I'm kind of used to with Tesla though, with the volatility. I'm used to these big movements up and down, but something to really keep in mind with the most recent news, this is why the stock took such a hit today, and that is because Amazon recently acquired full self-driving technology company Zoox, or Zoox. I don't know exactly how they want that pronounced, announced. But yeah, as I mentioned, they acquired a full self-driving technology company. So this is probably one of the biggest chances a competitor has to be successful against Tesla. As we know, Tesla has pretty much no competitors right now. They have a huge advantage in the data lead because everyone that owns a Tesla currently is driving the fleet and gathering data for that full self-driving technology, which is something no other company out there has. No other EV company has this many vehicles gathering data for them like Tesla does. So even with this most recent acquirement of Zoox from Amazon, they're still lacking in competition in the sense that Tesla still has so much more data and is way ahead in full self-driving technology, in my opinion. So I definitely think Amazon could be a threat to Tesla, but in terms of just the current positions, Tesla is way ahead of Amazon. But as we know, Amazon takes things seriously. So it's definitely something to be worried about as a Tesla investor, and of course, just as a Tesla enthusiast. I have to admit my bias. I definitely want Tesla to be at the top of this whole electric vehicle market. But like I said, I definitely think the people at Tesla should take this competition seriously because, as I mentioned before, Amazon does not joke around. But so far, Tesla definitely has the advantage still, in my opinion. And another thing to keep in mind, I'm not 100% sure on this, but I did see a picture with an article showing a vehicle with like a bunch of cameras mounted to it and stuff. So I'm guessing that was the Zoox technology company vehicle. And I definitely have to point that out because that's like an archaic method of recording data for Amazon, in my opinion, because that's really just the old way to do it. Tesla is the future in the way that they record the data for the full self-driving technology. They have cameras built into the vehicle all over that are really not even able to be seen most of the times, whereas you have Amazon acquiring this company Zoox, which has big bulky cameras mounted all over the vehicles and stuff like that, and they have to pay those vehicles to drive around and stuff, I would assume. So in terms of cost, this is just a lot less cost effective than what Tesla is doing, in my opinion. So at this point, it's not a threat, but Tesla should really take them serious, in my opinion. We have to realize at some point there is going to be some sort of bigger competition that we aren't used to. As we know so far, Tesla has really been ahead of the game when it comes to competition. There's really been no competition whatsoever. But at some point, I think one company will get at least kind of close to Tesla. I'm not talking like really close in terms of sales where it's going to overtake Tesla, but there's always a second company in a business sector that is pretty well known in addition to the first company. So that's just something to keep in mind as well. So far, it has just felt like Tesla has dominated all of the other competition, but I definitely think Amazon is something to take serious because eventually there will be a pretty solid competitor to Tesla. I'm not talking about a competitor that is pretty much equal to Tesla in terms of just as good and stuff like that, but somebody will try to compete with him. And if it's going to be Amazon, then I think they should take it serious because, like I said, Amazon doesn't play. But anyways, like I said, minus 2.79% for today, or minus $934. In total, we're still at plus 14.29%, or plus $4,074. Then finally, we have Apple stock, which is still at a pretty high share value even after the most recent drop. As you can see, minus 3.03% for today, or minus $465. And then for the total, plus 23.72%, or plus $2,848. Anyways, I just wanted to share another portfolio update for you all. I hope you enjoyed this video, and if you did, please make sure to smash that like button. Also, feel free to sign up to Robinhood and Webull with my referral link in the description. If you sign up with those links, then we'll both get some free stocks. But anyways, I hope you all enjoyed this video, and I hope you have a fantastic rest of your week. Stay safe out there.